Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 29th of May. All right, as we come into the MyFX Trading Hub, trying to work out, where the next potential trading opportunity is. Now, don't forget, yesterday I was telling you, like, when there's a US holiday predominantly on a Monday, the Tuesday becomes the Monday, and generally nothing happens on Mondays. So I've seen a lot of trading activity from a lot of traders when actually, you know what, nothing's really going on. I'll just give you a quick flick to the charts before I come back to the analysis. Now, I mean, these currencies, the Aussie and Kiwi had sort of broken higher on Friday. They've just been trading sideways, waiting for, the key events to come up. And we do have a few today to have a look at. The safe haven trade, diffused, now just trading sideways. Euro, we had the European parliamentary elections, a little pop to the top side, 30, 40 points. It's now just sort of drifting lower. Sterling doing its own thing, and dollar CAD pretty much still trading sideways in that big range. So nothing at all has happened yet. Okay, so if you're thinking trading's been hard this week, well, you've actually been trading nothing because nothing's actually happened, right? So let's just work that out first and foremost. Now, what are the trading conditions like? Well, if I just bring you back to the MyFX Trading Hub, you can put everything together. All right, so looking at the if I just get my pen working, the market conditions. Well, we've got normal market liquidity back after the UK-US holiday, but there's no momentum, right? The majors are waiting. And why are they trading sideways? They're waiting for fundamental data to give them direction, right? The core trends haven't changed, but everything's lacking momentum. And that's stemming from the core market drivers, which are sporadic. They come in, they impact, and then they disappear. Right? Unlike the fundamentals, which slowly build up, give us clear direction and makes it easy to trade. These events here are a bit of a nightmare, and that's why trading has been so disjointed for some time. Now, coming back to the major pairs at this point, there's a slight. I've got to give it a chance. There's a slight bit of bearish tone in dollar yen. Dollar Swiss will go back to a sideways, so don't worry about the safe haven there. Aussie and Kiwi, well, you know what? Overall, technically, hourly, daily, weekly charts, they're still breaking down, but right now on the short-term charts, they're just trading sideways. So don't get too caught up in just getting short these pairs. Like I had a trader yesterday saying, I was going to get short because you said they're going down. It's like, well, yeah, technically, overall, they are going down, but right now, nothing is actually happening. And this brings it into the where the major focus is. Okay, tuning you up for the next 24 hours of trading, the upcoming events. Now, we do have this NBNZ business outlook. This is one number which used to be about third or fourth tier, was inconsequential. But about 6 or 8 months ago, these numbers, the business outlook in New Zealand fell off the cliff. Right, it went from sort of like 0 to +5 to -5 to -50%. Like there was just like, it was a signal basically that the Kiwi economy was basically ready to collapse. So this number here, it comes out again today. It is very important. And the Kiwi, being a very illiquid pair, will move aggressively if there's any variance in this number. So make sure you keep an eye on that. And then as we come through the European session, there's a couple of numbers here to keep a close eye on. The German numbers, they can impact at various times. German employment is a very consistent number. So if there is any sort of major variance there, which I doubt there will be, then we may see some impact there. Now, the core event or the major event for the market, for the whole trading market will be the North American session, and that's going to be dominated by the Bank of Canada interest rate decision. All right, keep a close eye on the CAD. You also want to sort of, obviously the statement is going to be the key part to it. If I just take you into the actual data itself, when you sort of scroll down through the data, you're looking for major bits and pieces. The key part to the release is, okay, there's no change in rates expected. When there's no change in rates, the event can be extremely convoluted, right? The statement can be ambiguous. There can be, comments from various officials, if not the governor, and that can make it very hard to trade. Now, dollar CAD has been trading in a big range, very loose. I'm not expecting it to be an awesome opportunity, especially the fact that they aren't expecting anything significant. So really, when you come back to looking at the overall day, okay, there's a couple of numbers here to keep an eye on or to dodge. Okay, it's not about sort of trading these numbers all the time. It's about avoiding volatility, unnecessary volatility. As I said, the Asian session will be dominated by the Kiwi numbers. That'll come and go very quickly. Okay, you know, the RBNZ are already sort of in a bearish mode. They cut rates 2 weeks ago. The COF indicator, very, very rare is there a major change in the Swiss economy. But once again, that if there is, it can sort of come into play. But as I said, the major focus is going to be definitely the Bank of Canada interest rate decision. That's where all eyes are going to be, right? And I don't particularly think it's going to be a great opportunity. But if you're looking at the funds, make sure, you know, we do have a resistance line on the top side. That could be an opportunity. Once again, if the Bank of Canada are extremely dovish, well, then we might see this thing pop through 135 and scream to the top side. But once again, it's going to be in the statement, can be ambiguous, and you could just get a hell of a lot of volatility and the currency end up where it was initially. Now, one other thing I just want to highlight just before I finish up, once again, for those traders who are just getting into this and becoming, you know, trying to make trading a professional sort of career, just have a look at the news here. Dollar edges up on trade and political worries. Strong labour market boosts US consumer confidence. Remember like a day or so ago, they're talking about weak numbers, US economy shutting down and all this sort of doom and gloom. This is how weak and inconsistent the media is. And this goes for not Reuters and Bloomberg, but all of it, right? So don't fall into the trap of one bad number changes the trend. It doesn't. You know, yesterday they was talking about US dollar falls dramatically after Euro elections, blah, blah, blah. It was off 20 points. The numbers today, the consumer confidence numbers are stronger, but you know what? They're still not strong enough to change the overall trend of the US dollar. It's still trading sideways. So don't get too bent out of shape by what you're reading in the media. They aren't necessarily there to help you as a trader. It's more to give a bit of backbone, a bit of a story for people to read and really for them to sell advertising. That's what they're talking about. All right, guys, that's it from me. I think we've got a pretty quiet day ahead. There's still a lot to play for. This Bank of Canada interest rate decision and the rest of the data for the rest of the week. There's plenty of big hitting stuff coming up, right? And the markets have just reconnected, so don't rush in too early and put all your cash down on trades that don't really have much of a backbone. All right, guys, have a good trade day. We'll see you in the 247 trade zone. Cheerio.